This hot sheet, I discuss a decline in annual foreign investment in U.S. homes, updated listing data from Realtor.com, and the latest unemployment rates. Today is Friday, August the 4th, 2023. I am Byron Lazine, and the hot sheet starts now. Welcome back to the hot sheet. If you're joining me back here, hit the thumbs up. If you're on the live stream, let me know which market you're tuning in live from. And if you are new to the hot sheet, make sure that you subscribe to the channel so you don't miss another one. Now we have I know I said this last Friday, but I believe we have somewhere in the range of a quadruple confirmation from Lance Lambert of Fortune that he'll be on the Knowledge Brokers podcast later today. That'll go out at Knowledge Brokers podcast on the separate YouTube channel at Knowledge Brokers podcast, of course, at 2 p.m. today. Okay, so I'm going back to back here, hot sheet, then talking to Lance with Lisa Chinati and Tom Toole. And I'm not going to make as big of a promise as last week, but we do have quadruple confirmation this time, so it should happen. All right. What's not happening as much is foreign investment in U.S. existing homes. Okay. Annual foreign investment in the U.S. existing home sales market declined 9.6%. This is according to a new report from NAR, National Association of Realtors. Annual foreign investment in U.S. existing homes fell 9.6% to a total of $53.3 billion. Still a pretty big investment in our real estate market here in the U.S. International buyers purchased 84,600 existing homes. That'd be the fewest, though, since 2009 when NAR began tracking this data. From April 22 to March 23, foreign investors were responsible for 9.6 smaller share of U.S. existing home sales compared to the previous 12 months. So it's not that there is obviously less homes to pick from, but the total share is what declined here. So I don't want to get that confused or muddied where it's like, well, there's existing homes. Of course they bought less. No, they bought a smaller piece of the pie in the last 12 months. Okay, so that total pie was 84,600 existing homes. Remember, we're on a seasonally annual adjusted average somewhere around 4.25 million would be best case scenario for sales. From what we're tracking right now, 4.2 maybe. Okay. This is down. The total 84,600 is down 14.2% from the year before. It's the lowest number since 2009, again, when NAR began tracking that. So overall, existing home sales in the U.S. totaled just over 5 million in 2022. That was a drop of 17.8% from 2021. We're going to see another drop here, of course, this year. Lawrence Yun, chief economist from NAR, and you can find this article, the full article, on nowbam.com. Sharply lower housing inventory in the U.S. and higher borrowing costs across the world have dented international buyers for 2 straight years. However, recovering international travel following the end of the pandemic will bring more foreign transactions in the coming months and years. I think it also, the higher borrowing costs for sure. But when you look across, the world, there are really high inflation, higher than America in a lot of cases, as they battle with inflation in some areas, and obviously just more uncertainty on their economy than even we're faced with here. Foreign investor profile, origins, and destinations. Let's dig into this, where most of these international buyers are coming from. Okay, international buyers, by the way, who hold visas that allow them to live in the U.S. Or reside in the U.S. as recent immigrants, purchased $23.4 billion in U.S. existing homes. That's down 31.4% from the previous 12 months, and accounting for 44% of the total dollar volume of existing home purchases. International buyers living abroad purchased $29.9 billion in U.S. existing homes, up 20% from the previous 12 months, and representing 56.5% 56% of the total volume of existing home purchases. Okay. International buyers were responsible for 2.3% of the 2.3 trillion in existing home sales from April to March 2023. So, I mean, I've heard people say this before where it's like, oh, the foreigners are going to buy all the real estate. International buyers responsible for 2.3% of $2.3 trillion in existing home sales from March 22 to March 2023. Okay. Just to put that into perspective of what's happening there. The top 5 countries of origin by the number of U.S. existing homes purchased. China came in at 1, Mexico at 2, Canada at 3, India at 4, and Colombia at 5. Those are the top 5 countries of origin. And then the top destinations for international buyers. Top 6 states, Florida, 23%, attracting 23% of international buyers. So not only is Florida attracting more inbound migrants, inbound meaning people who already live in America moving from one state to another, Florida is the top attractor in that category. They're also the top attractor for destinations for international buyers at 23%. 1 out of 4 international buyers choosing Florida over anywhere else in the country. California netted 12%. And Texas, another 12%. So when you take Florida, California, and Texas, that's basically 2 out of 4 of all international buyers going into those 3 states. North Carolina, Arizona, and Illinois make out the top 6 for top U.S. destinations. Let me know in the live chat, does that surprise you? If you're in one of those, if you're a real estate agent in one of those 6 states, do you work with a lot of international buyers? Do you see that as a big part of your market right now? Florida held the top spot for the 15th year in a row. So this isn't just a trend the last couple of years. It's a 15-year in a row trend for foreign buyers, accounting for 23%. California and Texas tied for second place, while remaining the 3 states on the list tied for third that we mentioned. So Florida, Texas, and Arizona continue to attract foreign buyers despite the hot weather conditions during the summer and significant spike in home prices that began a few years ago. Florida, Texas, and Arizona are a different level of hot. I know, Florida's been in the news the last month being hot. I'm about to fly back down to my Naples home tomorrow to get the kids settled in for start of school and that kind of thing. But the level of hot in Texas and Arizona, it's different than South Florida anyways. South Florida is one of the few places where you don't have to be on an island and get tropical weather. So it's not, I think the weather, Lawrence Young here is saying that despite the hot conditions continues to attract, foreign buyers. When I think of South Florida, anything below Fort Myers in the west and Fort Lauderdale in the east, that's actually the only place in America besides Hawaii that you have tropical weather conditions. Okay, not even North Florida can say that. And tropical weather, not being on an island, would be, in my mind, attractive to people who want really nice weather, but maybe don't want to live or have a second home on island life, want to be on the mainland. How much more did foreign investors pay for these homes? It's interesting. Average purchase price was $639,900, 7% higher than the previous year. The median purchase price was $396,400, 8.3% than the previous year. So foreign investors, median purchase price was actually below right now the median purchase price for existing home sales in the U.S., which sits over $410,000. So foreign investors buying below the U.S. median for their median purchase. Their average purchase price, though, higher than the U.S. average purchase price at almost $640,000. I'm sorry. So what they had here right now, it's 410. So they did buy above in that 12-month time period, above the median price for existing home sales. So they're above on average and above on median. Correction there in real time. Good thing that Sarah Lentz, who wrote the BAM article, has the data right there for me in front of me. So for the 12-month period, existing home sales in the U.S. was 384,200. It now sits at over 410,000. During the 12-month period, the median purchase price was 396 for foreign. If we rank foreign investors By U.S. residential sales dollar volume, you've got China at 13.6 billion, Canada at 6.6 billion, Mexico at 4.2 billion, India 3.4, and Colombia at 0.9 billion. Home purchases from Chinese buyers increased, Lawrence Young says, after China relaxed the world's strictest pandemic lockdown policy. While buyers from India were helped by the country's strong GDP growth, a stronger Mexico peso against the US dollar likely contributed to the rise in sales from Mexican buyers. I've also spoken to a lot of real estate agents in different parts of the country, whether it be Southern California or Arizona or certainly Texas, which is, high on this list, where during the pandemic and even more so after the pandemic, you have a lot of Mexican buyers buying a home in America, whether it be as a second home or a move in as a primary home. All cash sales and investment property uses. 59% of international buyers purchased detached single family homes. 42% were all cash sales, compared to 26 of all existing home sales. Okay. Now, 42% of people do also have no mortgage on the property. So that matches that number. But 2 out of 5 buyer transactions for international being cash. Foreign buyers not residing in the U.S., 52% were more likely than resident foreign buyers, 32% to make an all cash purchase. It's also because it's harder for them to get financing. Okay. It's harder for a foreign buyer to get financing, so that, increases the odds that they're going to say, all right, well, I want the property. I'm going to buy it cash. Of the top 5 foreign buyer nations, Colombia has the highest share of buyers making all cash purchases at 67%, followed by Canada 51% and China 47%. Again, 59% buying detached single family homes. Half of investors, NAR study, purchased their U.S. property to use it as a vacation home, a rental property, or both. That's up from 44% the year before. All right, so that's all down. That'll be in the BAMX links for you. If you're not a member of BAMX yet, you can use the code HOT to get 10% off. We put all the links to the show and all of our daily downloads. We've got a couple from Lance Lambert in honor of the quadruple confirmation for the Knowledge Brokers podcast later today, that are going to be in the Disney download. There is some news here. I haven't followed it closely because I think it's more political. But I don't know if anybody mentioned in the comments. Anybody mentioned the Florida foreign buyers? DeSantis signed a bill where he restricted certain foreign buyers from property buys, but it wasn't like, if you read a headline, it's like, no foreign buyers can buy in Florida. And it's I don't think it's really that. Certain foreign nationals from China and 6 other countries from purchasing what the state would deem as sensitive American land. I think what mostly they're trying to do, and I'm bringing up a Real Deal article, that Florida basically created a no-buy zone. Florida's ban on some foreign buyers has industry scrambling for a response. That was the Real Deal headline. Governor DeSantis' crackdown on foreign investment is having a ripple effect on Florida real estate. Senate Bill 264 bans nearly all purchases by Chinese nationals and China-based companies. This isn't, just the typical foreign buyer here. This is Chinese nationals and China-based companies. It also bars buyers from what the state deems countries of concern, Venezuela, Russia, from purchasing agricultural land in the state, as well as any real estate within 10 miles of military and critical infrastructure facilities. Okay. So Florida's number one, 1 out of 4 foreign investors are buying in Florida. Okay. So they didn't ban foreign buyers. They did these, areas of concern. Now, by the way, a couple of these things make sense to me without digging too much more into this here. One being agricultural land. Like, the whole thing, Russia, Ukraine, the whole war, it's a big deal. That impacted wheat for a lot of countries in the world, because of how big, Ukraine is a wheat exporter. Okay. we kind of would like to control nutrition, maybe. I don't know. I think that might be a good thing. So agriculture makes sense, protecting certainly, property surrounding, military. There's probably every state probably has rules on that. So I know that was big in the headlines, but to kind of debunk those headlines, which NAR did, most of the foreign investors are buying 1 out of 4 in Florida. They continue to be the top state for the last 15 years. But Florida did put some restrictions on that. You can read more about that if you'd like. Okay, let's go over to some new information from Realtor.com just released yesterday. So I've got both of the charts available for you in the daily download. Okay, new listings tracked by Realtor.com fell 5.6% month over month in July. We'll compare these on Monday, as we always do on the inventory show, with the Altos research updated information. But this is Realtors, and this is just yesterday. New listings are down 20.8% on a year-over-year basis. New listings in July 2023, 347,000, are 27% below July 2019 levels of, wait for it, 513,204. Inventory tracked by Realtor.com rose 5.4% month over month. And active listings in July, 646,000, are 47.8% below July 2018 levels of over 1.24 million. Okay, so these are very similar numbers to what we've been tracking with Altos. But these two slides, courtesy of Lance Lambert of Fortune, who will be on Knowledge Brokers podcast later today, go over and subscribe to that channel. He's given us a quadruple confirmation, and I'm giving you at least a 92.5% chance that it'll happen today. We don't have any cancellations right now. So new listings coming onto the market, according to Realtor.com, July well below any level of new listings in, going back to 2017. It's also been noted by Altos that this is the lowest level of new listings coming onto the market ever, like in the history of tracking this data. Okay. And then housing inventory for sale, according to Realtor.com, year over year negative. Now Altos and Realtor.com both reporting the same thing there, above the levels of 2021. Very flat line in comparison to last year, and obviously well below 18, 17, and 19, a more normal year. And in honor of Lance Lambert, I'm also dropping this one down in the daily download today. If you're a BAMX member, use the code HOT if you're not, to get 10% off. Home price growth by months into decade. Every decade, last 4 decades, homeowners have gained 30% or more in that decade by being a homeowner, and most of them 40% or more. So just one of my all-time favorite Lance Lambert chart, dropping it down in the daily download today for BAMX members. That's 10% hot. If you're not a BAMX member, make sure you do that today. It's not just the daily downloads, of course. It's all the best courses in real estate from people who are actually showing you how to do it, who have actually done it themselves. So not pontificators, but people in the business, experts at their trades. Tom Toole with the objection course. I've done a lead pillar course, and we go screen share and show you exactly how to do it. We have live streams every single month in the group, and of course, private Facebook group, 10% off by using the code HOT today for BAMX. All right, the U.S. added 187,000 jobs. Unemployment rate drops to 3.5%. Would I call this a hot jobs report? I would call it a strong one. Now, the 187,000 change in payrolls month over month came in below estimate of 200,000. So that is actually good, the way Jerome Powell and the FOMC are going to look at this. 187 compared to 200,000, that's good. Unemployment rate, I think we all would agree this is good. We all want to see unemployment being, low. It's down to 3.5%, one of the lowest reading in decades, but it is below the estimate. So I don't know how Powell's going to look at that. This one they're not going to like. Average hourly earnings month over month is up 0.4%. The estimate was 0.3%. So steady, strong. Job market continues to be strong. That was just an update this morning, but there's still more job reports coming. We had one earlier this week. There's still more before the September meeting, and we'll see. It'll depend, this incoming data, how Powell will actually react in September. The market did tick it down, the percentages of an interest rate hike before the end of the year. They put those percentages down, but still certainly nowhere near zero, kind of like our 10-year treasury number here. So somewhere nowhere near where we want to be at 3.2. We're at quite the opposite. We're closer to 4.2. We went over this in detail yesterday, the highest mark we've seen all year on the 10-year. And we did hit our highest mark of the year on the I'm sorry, we almost hit our highest mark on the 30-year fixed yesterday at 7.2, our highest mark being 7.22. The high mark of last year was 7.37. Also, the 30-year fixed weekly survey came in at 6.9. So the trend right now is up on the 30-year fixed survey, and today's 10-year looks like we're going to remain somewhere around 7.25 on the 30-year fixed. All right. Hopefully I'll see you over at 2:00 at Knowledge Brokers Podcast. Subscribe. Love Lance Lambert. We have a quadruple confirmation from the man, and we should have that later today. Also, if you want to get into BAMX, use the code 10% to get 10% off. Use the code HOT. And if you'd like to come to Tom Ferry Summit, the code for that is PRBAMSS. You get $100 off your Tom Ferry Summit ticket. BAMX members get into BAM Bash on night one, of course. Hope everybody has a great weekend and an absolutely pleasant Friday. We'll see you back here Monday. As always, I'll be going from my studio in Naples, back in Florida, live, 9:30 on the East, 6:30 on the West. And until then, toodaloo.